Today, we're going to talk about whether the stock price by itself means anything. Say a friend of yours comes to you and say, hey, you gotta buy this stock. It's only worth $1. And their main competitor is worth $20. That means stock number one, which your friend is recommending, has a lot of upside. And then your friend tells you, hey, believe me, you're gonna thank me for the rest of your life for this stock tip. Well, let's look into this. There are other things to consider besides stock prices. And one of the main things is the number of shares outstanding. What does that mean? It is the number of shares that are out there, the total number of shares available for the stock. So, in the case of stock number one, sure enough, $1 looks cheap. However, they have 100 million shares outstanding, 100 million shares available. Stock number two is worth $20. However, they only have 1 million shares. So, next is we're going to calculate something called the market capitalization of the company. We call it market cap. The market cap for stock number one is $100 million. How do I get to this? Well, it's simply by multiplying the price by the number of shares. $1 times 100 million gets you to $100 million market cap. For stock number two, what is the market cap? Well, if you multiply $20 by a million shares, we get to $20 million. Stock number one has $100 million market cap. Stock number two has $20 million market cap. So assume you're going to purchase the exact same amount. Let's just, for the sake of it, $1 million. So we're going to purchase $1 million of both stocks. With $1 million, for stock number one, you get 1% of the company. So $1 million divided by the 100 million. With stock number two, however, we actually get 5% of the company, not just the 1%, because $1 million divided by 20 million is 5%. I own 5 times more of stock number two than stock number one. If I were just looking at stock prices, that is misleading. Let's look at another example. We're going to call this a stock splits. So say a stock trades at a price of $100, and then their number of shares outstanding is 1 million shares. We now know how to calculate a market cap, so the market cap of the company, therefore, is $100 million, price times number of shares. Now the company announces a stock split, 10-to-1 stock split. What does it mean? It means that if you have 5 shares of the company, if you own 5 shares, now you get 50. If you own 100 shares of the company, you get 1,000. So what happens to the number of shares outstanding? Well, it gets multiplied by 10. It used to be 1 million shares, and then now it's 10 million shares. What happens to the market cap? Well, by itself, just by announcing a stock split, did anything change? No. The market cap is still at $100 million. So now what happens to the price? The price has got to be $10. Why? Because the market cap is the price times the number of shares. It makes sense. We multiplied the number of shares by 10, and what's going to happen to the price is just that the price is going to be divided by 10. Nothing changes. You can ask me, like, why do then companies do stock split? It's like they do it so that they can reduce prices so that it's more available for people. Some people might find like to buy 1 shares at $100 is too much, so I'm going to make it $10 so more people can potentially buy it. Bottom line, a price of a stock by itself does not mean anything. You can absolutely not compare stocks just based on prices. There are other things to consider, such as shares outstanding and other factors. With that, keep striving to learn and get better. I sincerely hope that you enjoyed the knowledge I share with you today. It's now your turn, so please share, like, and subscribe. Thank you so much for your support, and I will see you next time.